So America is facing a housing crisis, and it's one we simply cannot ignore. Now, for years, the U.S. housing market has been just fighting with a shortage of homes, and recently, rising construction costs, higher interest rates, and reduced investor appetite have made matters worse. So housing developments have slowed dramatically, and the effects are just rippling across the nation. Let's start with the numbers. Right now, America is short between 3 and 7 million homes, according to whatever report you look at, from the Census Bureau to places like Axios. And there's no sign that this deficit is going to shrink anytime soon. Now, even the homes being built today are predominantly Class A and A-plus luxury properties. They don't really solve the affordable housing program. When I say affordable housing, I'm not talking about subsidized housing like Section 8. I'm talking about simply housing that is, well, more affordable. Now, because of the increased cost of materials and the high interest rates on construction loans and a labor shortage in construction, possible tariffs, affordable housing is nearly impossible to build right now. And this means we're left with a growing population chasing an increasingly limited supply of affordable housing. And when demand outweighs supply, over time, prices will naturally go up. Now, here's where it kind of gets even more alarming, because when you're buying a home or just buying a home, it's become prohibitively expensive. According to recent data, it's cheaper to rent than to buy in all 50 of the largest U.S. metro areas. Now, it's been like that for a while, but the gap has grown in a historically huge gap. Now, of those, 21 of these cities, the monthly cost of owning a home is at least 50% higher than renting. Now, as of February of last year, the average monthly mortgage payment for a median-priced home in the U.S. is $2,700, while a typical rent is $1,980, so about $2,000. So $700 gap, 37% difference, and that really makes home ownership out of reach for millions of Americans. Now, what does this mean? It means that more people will continue renting. This shifts creates enormous demand for multifamily housing. Like take Norcross in Georgia, for example, one of the markets we're investing in. In Norcross, there is no new housing construction in the pipeline, zero. Meanwhile, the population is growing, which only adds more pressure to the rental market. CBRE reports that in Q3, net absorption of multifamily units was the second highest rate for a third quarter since they began tracking the market in 1985. So this is a 72% increase above pre-pandemic third quarter averages, a pretty big jump there. Now, looking ahead, CoStar, who tracks a lot of commercial real estate data, found that the full year absorption for 2024 reached about 557,000 units, which is a huge increase of 70% over the prior year. Absorption means that these are the housing units that were now rented and no longer vacant after having been finished and open to the public. And this data underscores just how strong the demand for rental housing has become. Now, what does this mean for multifamily investors, right? So number one, higher demand is driven by limited supply. With more people renting, multifamily properties are well positioned to meet this growing need. Of course, then, with higher demand driven by limited supply, we expect rising rents. As more people compete for fewer units, rents are naturally going to go up. And all this means that there's strong long-term fundamentals for multifamily investments that are going to benefit from stable and consistent demand over the next several years, which protects them against market fluctuations. So here's the bottom line. The housing shortage isn't going away anytime soon. And while that's a challenge for many Americans, which is not good, it's also an opportunity for investors who understand the dynamics of supply and demand in the rental market. Now, you can take advantage of this timing by investing in multifamily syndication. Simply put, a syndication is a partnership where multiple investors pool their resources to purchase and manage a property. And this is often a large commercial asset like an apartment building. And by investing in multifamily syndications, especially on affordable housing projects we talked about, you can earn strong returns while helping solve this housing crisis. So if you'd like to learn more about investing with us, then head over to nighthawkequity.com/intro and book a call with us, right? If you're looking for opportunities, you have some questions, it's a great way to get started. If you're not quite ready to invest with us yet, that's okay. Go to nighthawkequity.com and scroll down a little bit. You're going to see a free mini course that introduces you to real estate syndications and how they work. So hopefully you found that valuable, and we'll see you next time.